Hello and welcome to Your Money, Your Call. I'm Julia Lee from Bell Direct. If you have a question about shares, our phone lines are open on 1300 30 34 35, or you can always email us on yourmoney@skynews.com.au. Joining me on the panel tonight, we have David Novak from Wealthwise Education and also Jeremy Hook from TMS Capital. It's the end of the quarter. I can't believe it. We're already through 3 months. Still trying to get through that 6,000 point mark for the Aussie share market. I guess, Jeremy, just looking at the market, how are you positioning your portfolio at the moment?
Yeah, well, I mean, end of quarter brings us to see how it's gone. 8% for the quarter. Well, a quarter-on-quarter performance like that would be a phenomenal year. We're not expecting it, Julia, but we're expecting, I guess, over the April to June quarter, a little bit of consolidation for the market overall. But within the market, we're finding stocks that are good value and we can buy, and we're finding a few that are a little bit on the top side. But overall, I think the market should be expected in this environment to probably have a little bit of a pullback. I think dips will be bought, though, and I think opportunities to get into the market won't be big 5+% moves, more the 2 to 3% moves downward. And again, walls of money will hit that while the interest rate environment remains as friendly as it is. So certainly a good quarter for March, and it won't be too bad for June, but I don't think it'll be quite as good.
Okay, I like that friendly interest rate environment. David, just looking at the market and technically, how are we looking at the moment?
Well, just like Jeremy was saying, I mean, we've had this very bullish run from the beginning of the year for the first 6 weeks on that early rate cut, that rate cut in early February. And, what's been dominating, of course, are the banks. They've been the leaders for the ASX, representing 32%. But like Jeremy was saying, I think there's a bit of a resting period here at the moment. Resources have been somewhat under pressure. We saw a nice rally only about a month ago with BHP and Rio, and they've pulled back really sharply by like 16%. Then, of course, we had the announcement by, out of China, was it today or yesterday or last night, saying that, they're going to ease back on their lending restrictions, or, allow more lending from 60%, I think, to 40%. So that certainly gave them a bit of a boost in the resource sector today. But I'm of the view, I'm a bit cautious about overseas at the moment and what's happening there. And so I certainly wouldn't be buying up here, and like Jeremy, I'd be waiting for a pullback. But if the ASX closes below 57.50, I'll turn negative. And of course, depending on what happens next week with the RBA and their rate decision.
Okay, so that was on the technicals and also on the fundamentals of the Australian share market. Let's go to our first caller. We have Abe on the line from Sydney. Abe, welcome to the show. What's your question?
Thank you, Joe, for taking my call. I'd like to ask the opinion of the panel about the Rio share buyback. I've got a large holding in Rio, and I bought them when they were really high in the 80s, and I've been holding them and keeping the dividend. Is the panel of the opinion that one should participate fully in the buyback? I mean, I do have share losses, tax losses to accommodate those franking credit. And does the panel think that this government is going to get rid of franking credit?
Sure. So a few questions there from Abe. Very topical. Rio is the buyback at the moment. Abe, a bit of pain in terms of Rio Tinto shares. He bought around the $80 mark, so looking at a potential capital loss there. I mean, what would you say, Jeremy?
I mean, the Rio off-market buyback's currently being priced in the market. That pricing will be determined by the end of the week and announced next week. For those in a low interest rate environment, a low taxed environment, such as those in allocated pension phase in their super, yes, this will probably make sense. For those on full marginal tax rates, it's very unlikely that this will make sense. The answer, though, really comes in the franked dividend that will be associated with the buyback. It'll be in the order of around $40 fully franked, which is an amazingly large franked dividend, and those franking credits on top of a $9 capital amount should mean that people who get their stock bought back by Rio will get pre-tax proceeds of somewhere in the order of $62 to $65. And again, it does await for the pricing that's going on in the market at the moment. But that'll involve probably a capital loss for people like Abe. The question is, Abe, in what entity are you holding it, and what's the marginal tax rate you're paying? Because that way you'll be able to determine whether it makes sense. But simply said, for those in a zero tax rate environment, they'll be able to sell their stock into the buyback and potentially be able to buy it back on the market several dollars lower. So it will actually add up to making good sense for a good number of people.
Okay. David, what do you think of Rio Tinto and the buyback?
Well, I can't add more to what Jeremy's said. He's covered it very comprehensively there. You know, it's interesting, you know, if you generally talk about the iron ore space right now and how much weakness there has been in that sector. It's been unbelievable. We saw a $1.20 drop last night below 53. So, you know, we need to see a bit of a bounce at some stage, you'd hope, and certainly Andrew Forrest would like to see it at the moment, and trying to get the big boys to agree to a cutback, but that's not going to happen. In terms of the other question, I think was, do you think the government's going to cut back on their on franking credits? Well, that would certainly have a negative impact on the markets, and that's a flip of the coin if that happens. But certainly, it's not going to be very positive, particularly for those superannuation funds that have been chasing fully franked yields, particularly in the bank shares.
Do you think it's likely to happen, Jeremy?
I don't think so, Julia. I mean, there will be a number of tax measures discussed for good reason, and some of them have got more validity than others. I think dividend imputation's been a really necessary part of the Australian economy, and it's really encouraged investment in shares, which is a good thing. I don't think removing it would actually bring any material benefit, certainly not compared to some other plans. But there's going to be some changes. Some of them will be probably more worried about and talked about than you need to really be, but you're going to have to be aware of it or take advice about this, because at some stage things are going to change. There will be advantages to take advantage of changes when they materialise, but we're looking for the silver lining in all of this, Julie, I guess, and there will be. But the franked dividends are a great advantage for a shareholder and an investor, and I don't think that'll be changing.
Okay, so that was Rio Tinto. That was the first call of the night from Abe. We now have Richard on the line from Brisbane. Richard, welcome to the show. What's your question tonight?
Hey, Julia. My question tonight is regarding two stocks. First is Elders, and the other is Novagen. Elders seems to be in a fairly strong downtrend, and Novagen in a fairly strong uptrend.
Sure, so let's start off with Elders. Having a look at Elders, and we have seen the shares coming off a little bit in January, February and March, but for the year it's done pretty well. I mean, a year ago the stock was under $1 and now we're seeing it trading closer to the $2.50 mark. We have seen cattle prices holding up very well. Just in terms of the technicals first, David, what do you think about this one?
Well, it's certainly in a downtrend since it hit that peak in late January, so I wouldn't buy it for that reason alone. But from the fundamental point of view, I mean, they've recapitalised the company. They've done a couple of capital raising, or several actually, over the years. If you listen to management, I think they're quite optimistic going forward, and projected that, you know, their target is earnings before interest and tax and depreciation of around 60 million by 2017. And, you know, right now the agricultural space is getting, you know, picking up with cattle and farming. So there's a lot of optimism in that space right now. Look, I like Elders going forward. I don't like the trend right now, but certainly if they hit that target that they're optimistic about by 2017 of 60 million, then the share price looks like good value down here in my book. But again, from a technical perspective alone, I can't buy it because it's trending down, and there's a huge volume today, I just noticed on the chart. So I'd wait for the trend to consolidate and show signs of moving back up before I jump in.
So, I mean, cattle prices were very strong ending of 2014. A little bit more softness creeping in 2015. What do you think, Jeremy?
And that chart almost tells you that. What it doesn't tell you is the currency, which is a big help now and will probably continue to be. But this is probably also about the market. The market loves a turnaround story. Elders was, you know, bereft. It was almost down and out. It has turned around, and it's now, you know, it's one with a future. And I think the easy money's been made there for now, Julia. My inclination is to think that you'd want to stay away for a little while now as a holder of the stock, or if you're looking to buy, you know, probably wait till it really confirms that it's found value. Because I think it's been a little bit overpriced in the last 6 months, and I think the expectations of the turnaround went a little bit too far in the shares. So it might be Royal Easter Showtime and the agricultural elements out in Sydney in full force at the moment, but it's not the time to buy Elders shares.
Okay, so you'd be staying away from Elders for the time being, despite the drought over in the US and herd volumes being quite low over here in Australia as well as the US?
Yeah, all those things are important factors which make it more investable at the moment, but they are each of their own unpredictable elements that change quite quickly. And as an investment, Elders has to be trading at or below asset backing to me to make sense, and it's not. It's well above that. So you've got to buy these not on an earnings play, because earnings can be so volatile from year to year. I treat these kinds of investments as ones where you've got to buy on a price asset basis, and again, it's not making sense at this level.
Okay, so some really good points by Jeremy. Now to Novagen. Now this is an interesting one. The shares have absolutely soared on the back of the results. Cantristix, its cancer drug has been seen to kill, I think, ovarian cancer cells from memory. Any thoughts on this one, Jeremy? Yeah,
I mean, Novagen has had a long history. It's a checkered one, I guess, and again, it's back in town. So these results look quite interesting. We don't have the stock, and again, I'm interested in it, but I'd like to see a little bit of the excitement die out of the price, and also I think a bit of time go through, because after this amount of news, we're going to wait probably more than 4 or 5 months for the next bit of news, and so I don't think it'll be one, having not been in the stock when the results are announced, to buy straight after months to come before the next set of data to come out of the company. I think you're better off waiting, but keep a watch on it. It's exciting, and that's seriously good numbers that we saw last week.
I think that's a really good point by Jeremy. What's the news flow going to be like to drive up the shares and continue on this very good trend that we've seen? I mean, David, just looking at this trend, do you think that it can and does have the legs to continue?
Well, it's certainly, you know, this is a hot space. If you look at the whole biotech sector, gosh, especially in the US, you know, that index since 2011 has gone from about $80 to $360. But then if you look at most of those companies, and I've had a look at a few of them, have no earnings whatsoever. So there is definitely somewhat of a bubble, you could say. But, you know, someone's going to strike it one day, and that's the excitement in this sector right now. And Novagen is just going along for the ride, although this is quite low in terms of pricing compared to what these other biotechs are doing. So I actually, for a small company, it's only got 52 million market value. I think it's a very good speculative play in a very important area, but you just certainly don't want to put too much into it.
Okay, so a speculative play from David. Looking quite interesting in terms of the charts. Jeremy with a very good point that a lot of these studies and trials do take a number of years, and it's important to have a look at the news flow, which might drive the shares up. We will be back with more after this short break, but if you would like to speak with our expert panel, our phone lines are open on 1300 30 34 35, or you can email us at yourmoney@skynews.com.au.
You don't need to be a big business to get the best possible travel rates for your business. You just need to bring an expert on board. A business travel expert dedicated to saving you time and money. At Corporate Traveller, we offer 24/7 service, real savings, flexible payment options, and clear reporting. And there's not even a contract to sign. Some business decisions just make good sense, don't they? Corporate Traveller. It makes sense to bring an expert on board.
To be a trader, you need that spark inside. The courage, vision, and determination. The eye to see opportunity, and the wit to seize the right one. IG.
everything was as easy as creating your website with Wix. Go to Wix.com today. It's free.
Dad?
Yes?
You got grabbed by a
Pterodactyl?
Yeah, and then got dropped.
Yeah.
And stomped on by a big herd of these. And eaten up by a big T-Rex. Who'll look after us?
None of us can see what's coming, but we can help protect those that matter most with award-winning life insurance from Allianz.
Try playing with this.
Allianz Life Insurance, because it matters.
There is no faster or more spectacular field game in the world than the Australian national game of football.
That is the mark of the champion. There's a sprinter on the ground. You've got to love this game. What more can you say?
Australian football.
Yeah.
Voting against it. Support Tony Abbott.
I think the club of spin doctors that are our politicians forced Australians to be more cynical.
Happy Abbott, get out!
Instead of more spin when there's a whiff of doubt, I mean, just front up and explain yourself.
We'll stop being dodgy Joe. Absolutely committed. And start being honest Joe.
The world might be changing, but the rules won't ever.
No, they get these zingers.
Keep your promises and above all, answer the bloody question.
PVO News Hour, only on Sky News.
Welcome back to the shares edition of Your Money, Your Call. We are still taking your calls on 1300 30 34 35 and your emails, yourmoney@skynews.com.au. And we now have Michael on the line from Sydney. Michael, welcome to the show. What's your question tonight for our panel?
Oh yes, thanks for taking my call. My question is on a speculative stock, AEE, which is Aura Energy.
Sure.
Now that's uranium producer, or it's sitting on a lot of large assets of uranium. Now it's probably a two-part question. I was just wondering, in a general sphere, uranium is at quite a bit of a low, and as China and India start going online with more uranium, because I think pollution is one of the main concerns in China. Actually, the average age, I think, is actually coming down. Like, I think people are dying 5 years earlier than they were, say, 5 or 10 or 15, 20 years ago due to the high pollution. So as the competition for resources gets heavier, the notion that the clean energy, and a lot of smart money is already going towards clean energy, and I know the US are a bit spooked by it, but places like India and China are going full steam ahead.
Sure. So looking at Aurora Energy and in particular at uranium prices, it is a small company, and looking at it, I think Hartley's has just started coverage of the stock, and they have an 8-cent target saying it's a speculative buy. The stock's at about 3.5 cents at the moment. But of course, we know with these smaller companies that a lot of capital does need to go into developing some of their projects, and we could see a number of potential capital raisings for a stock like this. Are you bullish uranium, Jeremy?
I think Michael had a balanced view of uranium, and one that I share. Uranium is one of the energy solutions of the future. It's got the advantage of being clean, but it's also potentially risky, as we well know from Fukushima and others. But the reality of uranium is its price will move around a lot. I think it is here to stay. I think it will be used in some parts of the world, and I think good, deep deposits of uranium are very worthwhile. Would I play at this end of the market? No, I wouldn't. The best end to play for me is to take a balanced view of that and buy BHP, which owns Olympic Dam, which is the very large uranium deposit, together with everything else. So I'm actually taking certainly some upside exposure to uranium, but not a one-way punt. And I think that's the best way you can play it. But, you know, there are, if the uranium price does move up, going to be opportunities in smaller stocks like Aura. It's just from a risk-reward point of view, I can justify a larger stock with some uranium, such as BHP.
Okay, so Aurora Energy, very small, under $10 million market cap. So we might move on to the next caller. We have Peter on the line from Melbourne. Peter, welcome to the show. What's your question tonight for our panel?
Julia, thanks for taking my call. I'd just like the panel's view on G8 Education, which had an announcement today and a price drop, and huge volumes went through. So just wanted to get the panel's view on G8.
Sure. I mean, G8 is such an interesting stock at the moment because we have seen a lot of volatility in terms of the share price. Share price has been coming down in 2015, and today they came out to say that one of their acquisitions, it's going to take longer than expected because of licensing and regulatory approvals. So it's now going to be after November, which means that the earnings from this acquisition doesn't kick in till after November. Looking at G8 Education, it's now not the only childcare provider on the market. You've also got Affinity, and I guess both of them have been pretty volatile. What's your view on this space and these stocks, Jim?
I took a good look at G8 last week as the price had come down. It's come down to good levels on valuation. The chart would suggest that it's still under some pressure. Today's announcement isn't of massive importance. It will lead to some restatement of forecast earnings for the analysts, probably adjustments down of maybe 4 to 5%, but it will hit the profit line in a positive sense in the following year. Look, the story here is actually a growth story, a growth by acquisition, where the market has become very comfortable over a long period of time that it can keep doing it. The market's sceptical about growth forever, though, and it won't keep paying up unless it can see that you can keep growing. And obviously, there's a saturation point for a business of this kind. At the moment, though, it's trading on about 11 times earnings, generates returns on equity of around 18%. It has a yield. It paid a 6-cent quarterly dividend when ex last week, so it's on a yield of over 6.5%, fully franked. So the numbers are good, but this comes back to perception. And you know, I know a significant event can be seen in the boardrooms sometimes, and during an analyst briefing in February, the Managing Director, Chris Scott, gave a verbal assault on analysts for not understanding his company. The market doesn't like to be told what to do, and there's a bit of viciousness, I think, which is behind some of the selling. I don't think it makes a lot of sense. I think the stock now looks undervalued, but the market's perceptions of its risk and its capacity to grow is a little bit under question at the moment. So that pretty much explains the recent underperformance, but not all of it, and I think there is a value equation in G8 at the moment.
Okay, so G8 looking interesting to Jeremy. I mean, the stock's trading at around about $3.20, which, you know, it's down from the peaks of $5.60, which we saw last year in August. But a few years ago, it was trading under $1, so it has been a good growth story up till now. Looking at the charts, though, David, what would you be saying?
Yeah, look, you know, it's come down to a previous low. This was back in November, December 2013, which is where it consolidated before it took off. So I'd be surprised if it doesn't find some support closer to that $3 level. I mean, you've been seeing some very big volume spikes here, which selling spikes, that's for sure, especially from the beginning of February, middle of February. But this has been a nasty downtrend since September last year. When you consider the market's been moving up quite sharply since the beginning of the year, this has gone absolutely opposite to that. So that's a bit of a concern. I would let the dust settle. I certainly wouldn't be buying it right now because you don't want to catch a falling knife. You don't know how much lower this can go. But look, I'd be surprised if it doesn't find support around that $3 level. But I certainly would wait for a while to see signs of support here, and I'm not seeing it right now.
Okay, so that was G8 Education. GEM is the stock code there. It is now time for a viewer email. We have one here from Suman, and Suman writes, just wanted to know what the experts thought about Westfield. WFD went down today when most of the other firms did well. So having a look at US shopping centres, we might start off with David this time. It does look like the shares have been moving sideways for 2015. Do you see it breaking that sideways movement anytime
Well,
soon?
it looks pretty fully valued, highly valued up here to me. Just looking at the yield on it doesn't look particularly attractive at 3%. You know, it's trading on a very high earnings multiple as well. So for my money, it looks to me like it's starting to break down here. If it doesn't find support where it is right now and it breaks below around this low here, it could easily pull back, you know, at least 50 cents or even further, $1. Down to, you know, looking at a price, just looking at that last key support level around $8.80 or somewhere like that. But look, there's a bit of spike in volume today on that down day, so that's not a good sign. So for my money, just looking at the valuation, the fundamentals and the technicals, I wouldn't be jumping into this right now.
So shopping elsewhere, Westfield, how about you, Jeremy?
What a beautiful, beautiful line. Juliet, look, I like the notion of Westfield. I like its side of the business. Obviously, it demerged the centre assets, which are the Australian, New Zealand, relatively mature assets, and Westfield Corporation now has a lot of the offshore key signature assets, like in particular, say, the World Trade Centre in New York, but those similar kinds of assets in the UK and around the world. And I think valuation probably is the issue. It bounces around a lot. Can't really explain why it was down like that today, but there's other days that it's up quite a bit. So you do see this with stocks again. It can depend on bond yields, and it's the largest stock in the property trust index, so it can get a little bit more treatment on certain days rather than others. But there is a point, I think, probably closer to $9, where this becomes an attractive point for an entry over the next few years. But certainly interested in the stock. The sums don't quite work out closer to $10, but they do nearer to $9.
Okay, so it looks like there would be a lot of buying support around that $9 level for Westfield. Its CEO coming out recently to say that it is planning to build up its company size by 50% over the next 5 to 7 years. So looking at some aggressive developments there. We will be back with more after this short break. If you'd like to speak with our expert panel, we'd love to hear from you. The number's 1300 30 34 35, or you can email yourmoney@skynews.com.au.
Dad?
Yes?
You got grabbed by a
pterodactyl?
Yeah, and then got dropped.
Yeah.
And stomped on by a big herd of these. And eaten up by a big T-Rex. Who'll look after us?
None of us can see what's coming, but we can help protect those that matter most with award-winning life insurance from Allianz.
Try playing with this.
Allianz Life Insurance, because it matters.
To be a trader, you need that spark inside. The courage, vision, and determination. The eye to see opportunity, and the wit to seize the right one. IG.
It's easy to create my beautiful website with Wix.
Let's go again.
If only everything in business was as easy as Wix. Go to Wix.com and create your stunning website today. It's free.
At SCW Eurodrive, we're all about solutions. From geared motors to heavy industrial gears, simple frequency inverters through to sophisticated decentralised technology or servo controls. SCW can tailor a package to suit your requirements. German technology, Australian know-how, local assembly, sales and service. SCW has the drive to keep you up and running.
SCW Eurodrive.
Have you been up all night?
I'm looking for hotel deals.
Why didn't you just go to Hotels Combined? They compare hundreds of travel sites in seconds.
Hotels Combined! Find the best price in seconds at hotelscombined.com.
Every digger has a story.
So he saved loads of guys on his own.
He saved his whole platoon.
But it's a story only half told.
An extraordinary example of heroism under fire.
For the first time, Tony Robinson is on a trans-Tasman mission.
This man represents all that's best in the Australian military tradition.
To uncover the personal history of our Anzacs.
Incredible story, isn't it?
Tony Robinson's Tour of Duty. New episode tonight, 7:30. Only on History.
Voting against it. Support Tony Abbott. I think the club of spin doctors that are our politicians forced Australians to be more cynical.
Happy Abbott, get out!
Instead of more spin when there's a whiff of doubt, I mean, just front up and explain yourself.
We'll stop being dodgy Joe, absolutely committed, and start being honest Joe.
The world might be changing, but the rules won't ever.
No, they get these zingers.
Keep your promises and above all, answer the bloody question.
PVO News Hour, only on Sky News.
Welcome back to the program. I'm Julia Lee from Bell Direct, and joining me on the panel tonight we have David Novak from Wealthwise Education and Jeremy Hook from TMS Capital. So if you have a question you'd like answered, please give us a call on 1300 30 34 35, or you can email yourmoney@skynews.com.au. And we now have Fred on the line from Sydney. Fred, welcome to the show. What's your question tonight?
Yeah, g'day guys. I just wanted to get the panel's view on MNS.
Sure.
Magnus Resource.
So having a look at Magnus Resources, MNS, looking at a graphite project in Tanzania. And of course, graphite is attractive because you need it for things like lithium batteries. You need it for, I think, the nodes to melt down scrap metal into steel. So a huge amount of demand. And of course, it's starting to be used in things like airplanes and cars as a lightweight carbon fibre. Do you like graphite, Jeremy?
Starting to get interested. No, look, graphite, I mean, again, we're talking about an explorer, we're talking about, I believe, African assets. So, look, I mean, yeah, you can certainly put some small capital into something like Magnus, but again, I'd be mindful, Fred, about how much you do put in. And a lot of those elements get trendy at times, and the market puts a lot of capital, the stock goes up. But just be mindful that it needs to do something actually real in terms of production if it's going to continue to deliver in share price terms. So we're not in that. But again, if you are, nothing fundamentally wrong with the idea. But investment markets will only keep going when they believe production's on the way.
Okay, so looking for production, I mean, looking at Magnus Resources, at least the share price has been moving in the right direction. I mean, Sierra's the other one that comes to mind when I think of graphite, and that one's been going down a little bit in 2015, whereas Magnus, it seems to have been in an uptrend since around about October. What do you think?
Yeah, well, again, I tend to agree with Jeremy on this one. I mean, they did announce today a debt financing of US 150 million, so obviously someone's got confidence in the company's ability to bring this to production down the track, which I would assume would be at least, 18 months, 2 years away at least. They did a capital raising back in March of $6.5 million, but the fact that they've secured debt finance of US 150 million must be some credibility to the project. But look, it's going to take a while to see any cash flow from this business, so I'd rather steer away from it at this stage and just go for those that are actually producing at the moment.
Okay, so more of a speculative one. That was MNS is the stock code there, Magnus Resources. Let's go to our next caller. We have Jim on the line from Sydney. Jim, welcome to the show. What's your question tonight?
Oh, hello. I'd just like to ask the panel, thanks, a very tightly held stock, Dicadata, DDR. Have they got any insights? It seems to be low volume stock, but I've been watching it for a while. They seem to have quite sweeping movements. I was wondering if the panel has got any insight on it.
Sure. I mean, looking at Dicadata, probably the reason why a lot of our callers haven't heard of it is because it is highly liquid. I mean, 98% and 99% of the stock is held by two shareholders. Looks like David Dicker and Fiona Brown, which is the reason why there's probably a lack of research on it as well. They wholesale hardware, software from a lot of the major computer brands out
HP,
there.
Packer.
Cisco.
And then that liquidity is a major issue. So if you don't get any research coverage and you can't get in and out of the stock, it'll be the very first reason why an institution won't go near it. It's all very well to be able to buy shares in a company. That's the easy part. But can you get out? If you buy of any size, you need liquidity. If you don't have liquidity, you're in a tight spot. If it's ever happened to you, you'll know what I mean. And that's why you're very careful about the kinds of stocks that you buy. So Dicadata is a good company. It's a sound business. Its growth isn't sensational, I'd say, so it doesn't necessarily jump out there. If it had high growth, having a tight share register, like Julia mentioned, and Jim, you mentioned, is very appealing because people will scramble for stock, even small amounts. And we saw, I think, a very good example, if you happen to notice, something like Blackmores today, which had some good news, but because it's a relatively thin stock, not traded well, it jumped very, very heavily, very quickly on that news. And Dicker Data's hope is to become that kind of growth stock that can deliver earnings growth, and it will get some attention as price will move, but it will never actually, until it divests from the founders more stock, have the liquidity to get the bigger institutions interested in investing.
Okay, so highly liquid, a good summary by Jeremy. Just having a look at their last presentation, they're expecting to see profit before tax of $31 million for the 12 months up to December. So you can go in and evaluate it. But as Jeremy mentioned, hard to get in and out of, and hard to attract institutional interest, given that it is so tightly held. David, what are your thoughts?
Yeah, same thing. It's like the average daily turnover is 9,800 shares. So 131 million shares on issue. And so this thing can move up and down. It's had a fantastic trend, rise over the last couple of years, that's for sure. Not surprisingly when you're holding most of the shares. And the earnings growth have been pretty good as well. But like you said, you know, I stay away from illiquid shares and prefer to be able to get in and out quite easily. So.
Okay, so that was Dicker Data. DDR is the stock code there. Let's now go to Nicholas. Nicholas, welcome to the show. What's your question tonight?
Good evening. It's Downer EDI.
Sure.
And they had a big contract come up a short time ago, and the shares seem to have just gone down a little bit. I bought them at 5.14, and they're halfway between that. So, what do you think?
Sure. So having a look at Downer EDI, I mean, comparing something like a Downer EDI to Monadelphous trades at a premium. Is there any reason for it? Would you prefer Downer or
No,
would you
prefer Monadelphous, and there's one main reason. I think Monadelphous has got a better balance sheet, net cash, which is everything in up times, but more so when an industry pulls back, like is happening in mining services and related businesses. But most importantly, what Monadelphous did during the upswing in the mining sector, they put some of their interests and their future into their infrastructure division, and that's become a much bigger part of their business, and again, to me, gives them a much better look as an overall entity. They are, in the industry, Monadelphous, regarded as the best to deal with, and their performance record speaks for itself. Downer is not bad, though. I wouldn't want to be just moving beyond the comparison issue. Downer at the right price is a good stock to buy, and I think it has some appeal. Again, I still think you've got to get your timing right with a stock like this. It's cyclical. Its moves will be relatively reflective of its earnings cycle, and therefore you want to get it when those earnings and the share price is relatively low ahead of a move back up.
And just regarding its recent purchase, Australian school buses, I think. What do you make of it?
Not a bad one, not enough to make me want to buy, but again, it wasn't bad. No, most of the things they've done in the last couple of years overall make me more interested in the company. It's just, you know, I think price versus the earnings growth that we're likely to see haven't quite met a happy level for me yet, Julia.
Okay, and David, does this one interest you?
No, unless you just want a steady income. You know, it's been quite steady for the last couple of years, around 5% fully franked yield. Certainly not a growth story, understandably, in this sector. You know, and really the share price has just been going nowhere for the last, you know, four years here. Yeah. So, yeah, look, it's just, you know, the dividend, the income is there, but certainly no growth, and there's better opportunities elsewhere.
Okay, so better opportunities elsewhere. It looks like Downer EDI has been suffering with that downturn that we have seen in terms of spending of mining services. Looking to diversify, it's recently bought a school bus operator, but it looks like our panellists still pretty cautious on Downer EDI. And on that note, we are taking a short break, but we'll be back to answer more of your questions in just a moment. If you'd like to speak with our expert panel, please give us a call on 1300 30 34 35, and you can always email us yourmoney@skynews.com.au.
If
I told you there's an issue that costs Australian business $10.9 billion every year and likely affects 1 in 5 of your people. Wouldn't you want to uncover it? And if you knew that every dollar invested in addressing it returned $2.30, could you ignore it? Make your people happier and more productive. Go to headsup.org.au.
Everybody over here, everybody over there. The crowd is live and I will feel this move. Party people in the house, move.
SCW Eurodrive are all about solutions. From geared motors to heavy industrial gears, simple frequency inverters through to sophisticated decentralised technology or servo controls. SCW can tailor a package to suit your requirements. German technology, Australian know-how, local assembly, sales and service. SCW has the drive to keep you up and running.
SCW Eurodrive.
Creating my stunning website with Wix is really easy.
Anton's Animal Kingdom.
If only everything in business was as easy as Wix. Go to Wix.com and create your stunning website today. It's free.
The Kia Cerato has surprised many of Australia's leading journalists since its launch. Paul Gover from Cars Guide said the Cerato hatch is the new Kia we've been waiting for and another surefire winner. And Tim Weissman from caradvice.com.au said the all-new Cerato is packed with the latest technology. The Kia Cerato hatch. It surprised the motoring experts. And with Australia's only 7-year unlimited kilometre factory warranty, it will surprise you too.
Dad?
Yes?
You got grabbed by a
Pterodactyl?
Yeah, and then got dropped.
Yeah.
And stomped on by a big herd of these. And eaten up by a big T-Rex. Who would look after us?
None of us can see what's coming, but we can help protect those that matter most with award-winning life insurance from Allianz.
Try playing with this.
Allianz Life Insurance, because it matters.
Despite controversial policies, is Truth the New Black? Will victory in New South Wales see Joe Hockey push his party on tax reforms and higher GST? 4 ex-ministers weigh up his chances, the challenges ahead and more. The Cabinet, Thursday.
Welcome back to the show. If you have a question you'd like answered, please pick up the phone and give us a call on 1300 30 34 35, or you can always email us on yourmoney@skynews.com.au. And we now have a viewer email. This one's from John, and John writes, the fund manager BT Investment Management acquired a UK fund manager in 2011, and that division is now the major driver of profits. With the UK market rallying, I guess, what do you think of the current price of BT Investments? So having a look at BTT is the stock code there. I think all money managers have been doing well in this environment.
Yeah.
Do you just ride the trend? What's going to bring it to a standstill? I guess the markets.
Yeah, I mean, the two things will be the rise in the market ending, and again, flows ending. And again, for long managers like BT is, they're the two big risks. The risks to BT are that key people could leave the organisation. Perpetual's probably the biggest fund manager listed on the market, where we've seen key man risk affect earnings. Matt Williams recently left Perpetual, and we saw what happened when John Sevior left a few years ago. Fund walks out the door, so to speak. But I don't mind BT, Julia, but I prefer 2 others in the space. And Perpetual's good, but I like Platinum Asset Management and Magellan Financial better. BT's 60% owned by Westpac. So it's effectively one of the things we just talked about, a lack of volume through the market as a result. But second, I don't think Westpac are a seller anytime soon. Wealth management sits as a very important part of all the big four banks' strategies, so I think BT will be held by Westpac for some time, so there's no possibility of takeover or a takeover premium. Magellan Financial and Platinum have higher returns on equity, roughly double what BT earns, and they have got a much lower cost-to-income ratio, and that's reflected of very lean, well-managed key organisations that are still growing their funds under management strongly. I'll give all credit to BT and their offshore expansion, and their business locally is good. It just doesn't offer to us as much upside as those other two businesses who are purely Australian-based fund managers with offshore investments, much sought after by Australian investors, and with the benefit of a continuing falling Australian dollar and better growth in funds under management and performance. We see them as both better performers than BT.
Okay, looking at that money manager type company, what do you think of BT? Do you prefer other money managers like Jeremy does, and he prefers Magellan Financial Group and Platinum? What do you think, David?
Yeah, I like those two as well. But you know, I just look at their earnings growth in the last year has been phenomenal. You know, that's what's kicked the share price. I mean, 102% increase in earnings for the last year and 26% return on equity. So, you know, obviously there must have been a flood of money that's come in the door. You know, it's a question of whether that's sustainable. The chart's telling me to be a bit wary up here because I've got what they call a using an indicator, the RSI indicator, Relative Strength Index, it's showing me a bearish divergence. So it's saying that that indicates it could pull back quite sharply from here. So, you know, it's fully priced in at this level. When you're looking at the earnings multiple as well, the question is going forward, you know, is that sustainable, or is it just a blip? You know, that's the big question. But certainly impressive earnings growth in the last year.
Julie, I might just on Magellan's return on equity is 58% and Platinum's 62%. So BT's certainly improved somewhat there, but still less than half the return on equity of those other two groups, which is quite interesting.
So preferring Magellan Financial Group and Platinum Asset Management to BT Investments, and I guess BT, that acquisition of Hambro Capital Management over in the UK has given earnings a boost, but Jeremy mentioned that he liked the high return on equity companies better there. Let's go to our next call. We've got Frank on the line from Sydney. Frank, welcome to the show. What's your question tonight?
Hi, I just wanted to get your view on the stock company called CVT. I know they've recently listed on the market 6 months ago, and they've already jumped from 20 cents to 60 cents in a couple of months. And recently they've signed a huge 10-year deal with Cisco. So I just wanted to know if there's, you know, a good long-term prospect in this company. So just get your views about this. Thank you.
Sure. So having a look at Cavada, CVT is the stock code. I think this was a backdoor listing because they were previously Prime Minerals, and at the moment they're an IT security company. So having a look at the share price of this one, I mean, it's been a huge and sudden leap in terms of the share price. David, when you see a share price like this, what are your thoughts?
Well, it's a bit early days for me because they've got no earnings to report, not positive earnings anyway. So I would steer away at the moment, and you know, obviously they've got a good story behind it, and I mean, you know, security is a focal point right now. So, you know, they could be winning some big contracts, who knows? But you know, it doesn't show up in their earnings to date over the last history I'm looking at here. So I can't, you know, I couldn't buy the stock. If you wanted to just follow the trend and trade it as a trend follower, probably, but I'd wait for a pullback first. But it certainly had a good rise. There's a lot of selling just recently at the peak, only a couple of days ago this week, actually. Last Friday, there was a huge reversal bearish bar with big spiking selling volume. So someone's obviously taking some money off the table, and why not when it's gone from 20 cents beginning of the year to 60 cents. That's not bad. So there's been some big selling just recently, so I'd be very cautious on this one.
Okay, so being cautious, it is relatively new to the market because of the backdoor listing, but looking at data breaches and IT security is a growing area. The government, the Australian government, is one of the clients as well. So I'd imagine government and corporates would be the big growth areas. What do you think, Jeremy?
Well, I can turn my computer on in the morning, I can turn it off at night, but apart from that, I'm not much good at this game of internet security. I know it's very important. So what I do with something like this, and I did, is go and ask some people that we know a little bit about that internet security business. And the comments that came back with, they've got some interesting applications, but there are others in that space as well. And like David mentioned, the profits aren't there now to talk about, and therefore we've got to have some capacity to estimate what sort of future cash flows and profit they can make. That's very hard in a competitive space, and so therefore, delighted though I'd be if I had the stock and saw it run up, I'd probably be getting out of it, because I don't think my ability to read any more than anybody else into where that stock price and profit future could be gives me confidence to hold. So, I mean, it certainly performed well, but there are risks as well as opportunities in this, and if you can understand the opportunities and how big the market could be, and whether Covata rather than somebody else can seize that market opportunity, then you stay with it or buy it. If you're unsure, you can buy one of the other stocks on the market or just sell the stock that you've got in Covata.
Okay, so that was Covata. CVT is the stock code there. A very good performance since it's been on the market, rising from about 20 cents to almost 60 cents. Let's go to our next caller. We have Lindsay on the line from Newcastle. Lindsay, welcome to the show.
Oh, thank you, Julia. I'm in one of those women's share group things, and for a long time we've held Ardent Leisure. We came in, like about $1 or something like that. And they got up to about $3.15, and we sold a hunk of them then. But they've really gone down a lot since then. And I know there was a change of CEO, I think, and a woman was put in charge, and then their share price dropped, and I thought that was very rude. And so I just wondered what you thought about them, because they have a lot of earnings in the US that are going well for them.
Sure. So Ardent Leisure, an interesting one. I'm sure it's not because the CEO is a woman, but more because the last CEO, he was such a long-standing CEO. He was around for a very long time. The interim result disappointed, and at a time when I guess there is a bit of uncertainty about Ardent Leisure's growth. New CEO, new head, so potentially a new change of direction. Looking at the share price, it doesn't look so good, David. What do you think of this one?
Well, there's certainly, it's been, on a downtrend since that peak in early October last year, and halved in price. And there was a spike low just recently at $1.75, and some very big buying volume came in. So that adds a bit of confidence at that spike low at $1.75, and it's recovered to about $2.24 where it is now. I don't like the trend, but I think the business itself, I mean, there was that sudden departure of the CEO, and there's a few questions being raised, I think, at the moment by the major institutional shareholders, like, why did he leave? Because he's doing a great job. And I think it has something to do around the health club business, or one of the divisions that underperformed. But we'll find out very shortly, that's for sure, what the real reason was. But that's what institutional shareholders are asking at the moment. But look, it's a solid business, and as the caller said, they've got a good business in the US, particularly with the Aussie dollar being down. That's very positive for the company, and they've got they've turned the corner in the last year. Their earnings was actually looking quite good. So it's surprising why the CEO suddenly left, and that's the big question mark right now. But just on the trend alone, I couldn't buy the stock until I see some form of a basing pattern. And yeah.
I mean, it's an interesting one. A diversified portfolio of businesses. Its main event business in the US has been doing well. I think earnings growth was over 50% there. But its health club business, which was struggling. It's quite competitive in that gym space. Yes. What do you think when you look at Ardent Leisure, Jeremy?
I think it got a bit overpriced there last year, but the sell down left it undervalued. The reason it was sold down was obviously well described, change in management. And Deborah Thomas is the new CEO. Her magazine and publishing background was seen by some institutions as being quite unsuitable to manage the diverse entertainment assets of Ardent. personally, I see a good reason to disagree with that. I think her record would be excellent, and the kinds of roles that you've got with managing this business as opposed to others is more about sales and marketing more than the nitty-gritty. There's a good team at Ardent, and alongside Deborah Thomas, I think it actually will be well-managed group. The value is in the stock now. It was when it was sold down. I think there's some upside, a very good dividend, a bit over 6%, and but you have to own these assets at the right price, and closer to $2 is the right price. Above $3 was overpriced, so things have changed there, but I think there is still some upside, Julia.
Okay, so looking interesting for Jeremy. That was Ardent Leisure. This show has just flown. It's been a great show. That's all we have time for today, though. Thanks so much to our guests, David Novak from Wealthwise Education and Jeremy Hook from TMS Capital. And to you, our viewers, for all your calls and your emails. Until next week, I'm Julia Lee from Bell Direct. Have a great night.
The information featured in this program is general in nature and therefore should not be relied upon. Guests appearing on the program may have commercial arrangements with some of the companies mentioned. Before making any investment, insurance or financial planning decisions, you should consult a licensed professional who can advise whether your decision is appropriate for you.